The Nasdaq just jumped nearly 2% today, and it's all because of one sector. Chip stocks are leading a comeback from the Fed sell-off. But here's the thing, most young investors are watching this rally happen instead of actually making money from it. Today, I'm showing you the exact move that could turn a $1,000 investment into $3,400 over the next 5 years. Let's go. What happened today? After the Fed's rate hikes sent bond yields through the roof earlier this week, semiconductor stocks staged a comeback. Intel led the charge. The Nasdaq climbed 1.9%. The S&P 500 rose. But the Dow actually fell 500 points because banks got hit with higher borrowing costs. Translation? Not all rallies are created equal. Today, we're breaking down exactly why chips rallied, whether you should buy right now, and the specific stock or ETF to own by tonight. This is the kind of market intel that separates people who watch the market from people who profit from it. Let's talk chip stocks. Semiconductors are the brains of everything: your phone, your car, AI servers, data centers. For months, investors were worried about oversupply. Too many chips, not enough demand. But something shifted this week. Two things, actually. First, the Fed's rate hikes spooked the market on Tuesday and Wednesday. Everyone sold everything. Panic selling. But then smart money realized, higher rates are actually good for chip makers. Here's why. Higher rates mean the dollar gets stronger. American chip companies export globally. A stronger dollar makes their products cheaper overseas. More sales. Second reason, AI data centers aren't slowing down. Microsoft, Google, Meta are still spending billions on GPU chips from NVIDIA. That demand floor is solid. So when bond yields spiked, chip stocks initially got crushed with everything else. But by Thursday and Friday, traders realized the sell-off was overdone. Chips have real earnings growth behind them. So they bounced back hard. That 2% Nasdaq jump? Most of that came from the Magnificent 7 tech stocks and semiconductor plays. The rally is real, but it's specific. It's not a market recovery. It's a certain sectors recovered because fundamentals didn't actually change. Now, should you buy chips right now? Here's the honest answer, it depends on your timeline. If you're buying for the next 5 to 10 years, chip stocks are actually cheaper than they were 2 months ago. The sector trades at a reasonable price-to-earnings ratio right now. Not expensive. Not cheap. Fair. For a 25-year-old, that means you're buying at a better price than your 35-year-old coworker could get. That's an advantage. But, and this is important, don't buy because of today's rally. Don't chase momentum. Buying because something went up 2% today is how people lose money. You buy because the long-term story is solid. And for chips, it is solid. AI adoption isn't stopping. Data centers need more chips every quarter. That's a 10-year tailwind. So the move isn't to panic buy because FOMO kicked in. The move is to position yourself with a small amount today, then add more over the next 3 to 6 months as you get your paycheck. Dollar cost averaging. That's how young investors beat the market without needing to predict the next move. Here's the data backing this up. Over the last 5 years, the semiconductor sector has returned 127%. The S&P 500 returned 91%. Chips outperformed. But this year? Chips are up 18%. The S&P 500 is up 14%. Still outperforming, but not by a huge margin. The gap has narrowed because the sector had a massive run-up in 2023. So valuations got stretched. Now they're normalizing. That's actually good for new investors. You're buying a sector with real growth potential at prices that aren't insane. The top semiconductor companies is NVIDIA, Intel, ASML, Taiwan Semiconductor, all have profit growth forecasted at 15 to 25% annually for the next 3 years. That's real. That beats inflation. That beats bonds. Your action step is coming in 30 seconds. This is what separates people who understand markets from people who don't. Here's your action step, and this is specific. Open your brokerage, Fidelity, Vanguard, Robinhood, whatever you use. Search for the ticker SOXX. That's the Invesco Semiconductor ETF. It gives you exposure to 39 chip companies, not just Intel. Diversification. Buy $100 worth today if you have the cash. Set up an automatic investment of $50 every 2 weeks for the next 6 months. That's $600 total. Dollar cost averaging into a sector with real tailwinds. Don't wait for it to go down further. Don't wait for the perfect entry. The perfect entry doesn't exist. Time in the market beats timing the market. Every single time. That's it. You just positioned yourself ahead of 90% of young investors who watched this rally happen and did nothing. Drop your biggest money question in the comments. I read every single one and might feature your question in tomorrow's video. Subscribe for daily financial intelligence that actually makes you richer. See you tomorrow.